Good morning. Today is Monday, January the 15th. The time right now is 1 minute to 8 in the morning. And just to be a bit of a recap as to what happened before the weekend, we can see that equity prices in the States continue to stay elevated, although the momentum has somewhat been lost. We can see that in the Dow Jones Cash Index, the market actually registered a fresh new high on Friday with 37,825.27 being the new high. And the market is pretty flattish, although we can see that the market has not pulled back significantly. So that means to say that there is incoming money flow into the United States because the Dow Jones is actually an international index and it actually represents a capital flow from overseas. And when we look around the world, when we look, especially in the Middle East, we can see that the peace is not definitely happening right now. And we can see that the situation in the Middle East is getting from bad to worse with enlargement of the war in between Israel and the Palestinian has actually widened. Not only the Israelis are fighting in the Gaza, they are also fighting the Hezbollah in Lebanon to the north. And right now we also see the Houthis militants has also been blockading the Red Seas by attacking passing vessels, container ships, as well as oil tankers transpassing into the Red Sea itself. So that has led the US and the UK military to actually launch simultaneous attacks on Houthis target in Yemen on Thursday and Friday. And this is actually causing tensions to rise. And we can see capitals is moving away from all other places and moving and parking their money into the United States equity market. So this is probably the reason why Dow Jones has not really come back down in a big way. So I think over time we can see higher prices in equity prices simply because of capital flow from overseas. And that being the case, we can see that the S&P 500 also managed a marginal high for the year, but it is still a whisker away from the all-time high, which was last traded on January the 4th, 2022. The high traded on Friday is 4,802.4, whereas the all-time high is 4,818.62. I think it's a matter of time before the market do register a new high beyond the 4,818.62 high that we've seen back on January 2022. So based on what we can see, momentum, yeah, it's not very, very strong, but it's also not coming down. So I think it has a little bit of a bullish bias as far as we can see. In the Nasdaq 100, the Nasdaq has been managed to recover back to where it was before the market took a dive at the beginning of the year itself. So now the high is at 16,900 on Friday, not very far away from the all-time high traded just before the year end 2023 at 16,969.17. So again, this is likely to go even higher based on the chart pattern itself. And over in Asia, we can see that the Nikkei has been very, very strong, largely because inflation has actually come off a little bit in the latest reading. So that actually take the pressure off the Bank of Japan having to readjust the monetary stand, and that is actually seen to be bullish for equity markets, especially in Japan. So we can see the high traded last week is at 35,710, and this is a 34 years high. So based on interest rates outlook, we can see that the market has been very supportive of Japanese equity markets, and the momentum seems to have picked up. And in Hong Kong, we can see that the case for buying actually now is presenting itself. We can see that the market actually went down to test last year low at 15,980 without taking it out. The low traded so far is at 16,069 in Hong Kong futures contract itself. So we can see of late, we can see there's an uptick here, very, very strong uptick to 16,495 before pullback. I think this is building up a case for a long position, in my opinion, because I think that there is going to be a larger degree rebound in the three-wave rally, basically targeting about 17,400 to 17,500 levels. So this could be a buying opportunity, in my opinion. If you can buy within 15,945 to 16,125, that would be a great level to pick up long position if we can, okay? Then over in the dollar itself, you can say the dollar has been in consolidation mode the whole of last week. It's trading between 101.60 to 102.80 level. So between this 120-point level, the market is basically sidelining with a bias to the upside. I think the market does present itself to be strong, and I think there's a good chance the market may actually go back and test a 104.25 to 104.44 levels. So do look out for buy on the dip opportunity in the dollar index. And also that corresponds to the outlook for the principal currency. So long as the dollar remains sidelined, the principal currency also do remains sidelined. And with the possibility that we may see a bit of an uptick towards 110.15 to 110.40 levels. And if that happens, I think that will be a selling opportunity, in my opinion, to complete a three-way pullback, possibly targeting 107.20 levels. Sterling have a slightly different feature here. We can see sterling does looks a lot more stronger than euro dollar. So I think it's the upside because the highs are getting higher. So I don't believe this high that we saw on Friday at 127.85 is the high. I think there is still scope for the market to go into a new high beyond 128.27 over time. And over in Aussie also goes into a sideways market consolidation period. And if we can see an uptick into the 0.6760 to 0.6780 level, that could present some selling opportunity for the continuation of this pullback from 0.6870, targeting somewhere near the November close at 0.6605. Dollar Canadian is also sideways, but with a bias to the upside. Okay, this is also part of the bullish dollar outlook across the board, and we can see the dollar versus Canadian actually bottomed out at 131.77 with a high last week at 134.43, and I think this momentum may actually go up higher to test the 135.85 levels, which is the November close. The dollar yen is also looking to be bullish, although the structure here have already completed what looks like a five-wave rally. And if we get a pullback to 143, it 10 to 143.75 level, that could be another good level to pick up some long position, because so long as the interest rates posture do not change for the Bank of Japan, that means to say the difference in interest rate between the US and the rest, between Japan and the rest of the world is still going to favor dollar relative to the yen itself. So this is something that we want to watch out as well. And over in precious metal, we can see precious metal did pull back to $2013.40 thereabout before it actually bounced. And this pullback actually seen a 61.8% retracement from a low of 1,973 to $2,088.55. So this pullback is actually quite healthy, and I think the market, unless it blows above $2,088.55, I think there's still a scope for the market to come back down again, technically speaking. And if we can see prices coming back lower, the most ideal level is $1,912.65 with a target within this area. The area is actually quite wide, $1,869 to $1,885 being one of the targets here on the lower end. But I think once the market hit $1,912, that could be about it for now. But I think there's a scope for further losses in precious metals. And over in silver, we also see that silver right now is looking to be quite stable, although there was a marginal breach of $22.49 to $22.46. That actually saw prices rebound. And so long as market can continue to hold out, I think there's a scope that maybe a bottom it could be in silver. So between gold and silver, one of them will have to take the lead. For now, I think the odds of precious metal rebounding is actually quite good based on the silver chart. So if silver can go up, it may actually take gold along for the ride. But overall, I think gold does have the potential for another dip. Okay, and over in oil market, this is something that we want to watch because the situation in the Middle East has not eased. Over Thursday and Friday, US together with the United Kingdom has actually launched numerous aerial attacks on Houthi targets based in Yemen itself, and this has already prompted talks that the Houthis is going to retaliate, although they have not done so far over the weekend. But the situation is not easing, and we also knew that the war between Israel and Palestinian has actually widened. Not only Israeli have to fight in Gaza, they also have to fight in Lebanon as well, which they have also launched numerous attacks against the Hezbollah located in the north. So we can see that by and large, the Middle East situation is actually conducive for higher oil prices. Although so far the oil prices has gone up, but it has so far been beaten back. I think there's a bit of a manipulation going on here to cap oil prices from rising. But overall, the larger degree three-wave rally, which I think can unfold over time, may see prices stay above $76.14. I think that will be a case for the market to target somewhere near the $78.80 to $79.70 level. And over in Bitcoin, we can see Bitcoin has actually come off after the confirmation of the ETF license being given. We can see prices now is pulling back. In fact, the high traded is just under 49,000, which was just before the official approval. And we can see that after that, you can see that the sentiment seems to be selling the news, and prices has come back quite a fair bit. Currently trading at $41,860, with the nearest support being at 40,234 to 40,900 levels. So the immediate support could be around that area. So do watch out for that. Although technically speaking, this market have a long way to go, which I don't think that we have seen the top, the ultimate top just yet. Okay, so look out for further rise in Bitcoin itself, although prices right now is retreating. Okay, guys, today we have Martin Luther King Jr. Day, and the states in US, the market will be closed. So do note that the market will not be opening today in the states. So it's going to be a quiet day. Bye-bye. Take care.